Hi guys, welcome back to the channel. So today we are going to be talking about how to build a solid financial foundation. So if you are somebody who is just starting out, or you just realize that you have not built a financial foundation, then this video is for you. So this is not like a scripted video, so I'm just going to be raw with you on how you can do this and how things I've done to build a solid financial foundation for myself. And now everything is just on an autopilot. So these are the things I'm going to be sharing with you in this video. So first off, so many people reach out to me about wanting to start investing. So they want to start investing in the stock market, crypto, and all those sorts. But during the conversation, you realize that this person have not really got their house in order. And if you don't get your house in order, there's no way you can start investing and you're going to be successful at it. So wealth building is not just something that you build on the sand. If you build it on the sand, it's just going to collapse at one point or the other. So it requires building a system. And that's what we are going to be discussing in this video. So if you are keen on building a good financial foundation, then the first thing you need to do is you need to know where you stand. By where you stand, you need to understand some certain numbers like your income and your expenditure. So if you're on a paid job or you are on a contract or you are on whatever that is earning income for you, so you need to know all these sorts of income. When you know all these sorts of income, you know the exact number that comes to your account every single month. And then you need to sit down and also document all your expenses as well. How much you pay your rent, how much you pay for this, how much you pay for that. So you need to know all of these numbers. When you now compare your income and your expenditure together, your aim is to be living way less than you earn. So that means your income must be more than your expenditure. The moment your expenditure is more than your income, then there is a problem that needs to be sorted out. So what you are aiming for is to live below your means, because that's the foundational thing to build wealth. Because if you live below your means, that means you have something left behind after all your expenses that you can now save and invest. So this is the first step. How do you do this? It's simple. The first thing that you can do that will help you is go through your bank account, download the bank statement for the last 3 months. When you download all those bank statements, look at everything coming in for you. Maybe you have a paid job, you have other side also as well that is generating some income for you. Write all of these things out. Now look at your expenditure as well. See where your money is going. Look at your biggest expenses, things like rent, food, transportation. Look at all those things. So when you now look at all those things and you know your number, you know that every single month, this is what I earn. And every single month, this is how much I spend. That is where to start from. When you now know this number, then you know that to live below your means, you now need to look at it from two perspectives. One of the perspective is, are there anything you can actually cut out of all your expenses? If there is anything you can cut out of all your expenses, maybe look at your biggest expenses like the rent, food, and transportation. See, can you get a smaller or get an apartment somewhere else that is not as expensive as where you are living? That's one thing to consider. Another thing to consider is in terms of food. How do you get your food? Do you get them in bulk? Do you do this? See if you can cut something out of there as well. And then transportation. Do you think if you move closer to your place of work, you're going to save in transportation? So you look at all of these things. And sometimes people are actually not living extravagantly. The money they are earning is just not enough. So these sort of people cannot cut anything of their expenses to be able to have something left behind. What they actually need to do is to work on themselves, upskill, learn so many other things to be able to now build more income. That is what is needed to be done at other time. So many things have happened. I could remember when I first moved to the United Kingdom, I was working as a nurse, still working as a nurse. So, but the house I got then was not that expensive. So I lived in that house for like 2 years, even though with some inconveniences. I lived there for like 2 years just to be able to save more. And after I saved more and I built a good financial foundation, I was able to move out of that house to move to where it's more comfortable. So that is how to approach this thing. And what did I do then as well? Apart from living in a house that is cheaper, What other thing? I applied for promotion at work, which increased my income a little bit more. I did overtime to increase my income as well. So these are sort of things I did then to try to build this financial gap. And luckily it worked for me. So this might be what you need as well sometimes. You may need to work more on yourself, build more skill to be able to now earn more. This is what is needed sometimes. Not all the time you cut. There is limit to what we can cut when it comes to our expenses. So if there is nothing to cut, earn more. There is no limit to what you can earn. You can do extra job, you can find other side also, you can do so many things in this day and age to earn more. All of this content we are creating, you post on Facebook, you post on Instagram, some of these things later earn for you. So look at any avenue that you can earn more and earn more. So this is how you build a good financial foundation, and this is the first step. Know the numbers, find a way to increase your income or cut down on your expenses to be able to save more and invest more. That's the number one thing. Now, number two, after you understand your numbers, you know your income, you know your expenditure. The number two things that you now want to build is to build a safety net, which is your emergency fund. So this emergency fund is so critical, right? Because emergency is not going to knock on your door when you want to come and say, oh, emergency is here, I'm here now. No, it's not going to come on your door. In fact, anything can happen in form of emergency. We are in this world and we have seen so many things. People that are not expected to lose their job have lost their job at a point that they are not even thinking about it. You can be living in a house, especially in this UK, you can be living in a house and your landlord will come one day and said they want to sell their house. You need to leave their house in 3 months. By saying that means you have to go and look for another house and you need to pay a huge deposit for that house that you are moving to as well. That's a form of emergency as well. So you need a safety net. That's the next thing to build. So to build a safety net, your aim is to build at least 3 months of your living expenses. So when you want to build 3 months of your living expenses, obviously not so many people will be able to afford their 3 months of expenses at once. So you start from what you can afford, maybe like £500, £1,000, or any country that you are living. Start from the basics, because you remember in the first step, you now understand your expenses. You know how much you spend in a month. So you want to build 3 months of that. That's your safety net. And that's the next step for you. When you are able to build this sort of safety net, it helps in solidifying your foundation, because you can't jump to the last step of this process without building this second step. So when you build your emergency fund, remember, you understand your income and expenditure, you build an emergency fund. The next thing for you now is sorting out your debt. I mean, bad debt, consumer debt with very high interest, things like credit card, buy now, pay later, all of these things. I personally don't have any of those kind of debts. Buy now, pay later, I don't do it. I use credit card a lot. In fact, my credit card limit is like over £20,000. And everything I spend in a month, typically, apart from my rent and other things, I spend it on credit card. But I pay it in full every single month without a miss. And I don't pay minimum balance. So these are the sort of things. Like, many people are not aware of this. What they do is that every single month they pay the minimum out of their credit card. And some of this credit card carries like 18% interest rate, 20%, 30% interest rate. If you are one of those people that spend on their credit card and pay minimum, what you are paying back in interest is so ridiculous that there is no way somebody can build any tangible wealth paying those kind of rates. So you need to sort out those debts, because if you don't sort out this debt, they are going to cripple you. No matter what you do in step one, in terms of earning more, do all of those things, if you still have this sort of interest crippling you, there is no way you can build any wealth. Now, if you have all of these debts, there are ways to pay off your debts. There is one way called the snowball method of paying your debt. With snowball method, what it means is that you list all your debt, right? And then you start paying it off from the smallest. You pay, let's say you owe £20 here, you owe £50 there, £100, £500. You list it from the smallest to the highest, not minding their interest rate. Then you start paying it off from the smallest. You pay the £20, you pay the £50. What we have learned is that this has an effect on your psychology. because paying off each debt means it's a win for you. So it tends to build a momentum and it pushes you to want to pay off other ones because you want to tick those boxes. That is the effect of the snowball method. And this is one way that people use to pay off their debts. So if the snowball method is what you want to use, because it gives you a sense of satisfaction that you are ticking something off. Because you know once you pay this debt off, that is gone. Then you go to another one that is done like that. So that is the snowball method. Another method that people use, this one is mathematically okay, and that is the avalanche method of debt payment. When you want to use the avalanche debt payment method, what that means is that you list all your payments and you start paying it off from the one with the highest interest rates to the one with the lowest interest rates. That is how avalanche method works. This makes sense mathematically, but in terms of psychology, I prefer the snowball method. So whichever one works for you, just find a way to get rid of all of these debts. I don't have any of these debts, and I have a peace of mind without all of these things. And that means little things is going out of my money after every month. Because what people don't realize is that if you have all of these debts and you don't pay them off, at the end of the month, when your money comes in, those money will be coming out as well. And the more you can limit what goes out of your account in terms of direct debit, the more you have left over. So people don't realize this. You get this debt, you get that debt. At the end of the month, they will take their money out. And when they take their money out, you can only work with what is left. But if you don't have this debt, you have more left. And you'll be able to now save and invest more. So that is how to do it, guys. That is you building a solid financial foundation. Imagine you know your income, you know your expenditure, and you are living below your means. You have an emergency fund. You don't have any debt, like consumer debts. Obviously, there are some other debt that they consider good, things like mortgage. So if you have those sort of things, then after we have built these 3 steps, we can now move to the next step, which is learning about investing. I'm not saying start investing. I'm saying learn about investing. At this stage, you want to start learning about assets and liabilities. You want to start learning about things you can get yourself involved with. What sort of investment vehicles are available to you where you are? Is it real estate that is available to you? Is it stock market investment that is available to you? Is it crypto? Is it other businesses? You need to start looking around and checking out all of these things. But luckily, some of these investment vehicles require low barrier of entry than other. So if you are somebody who don't have high income, you just have little amount to invest, you can also start investing. Things like stock market has low barrier of entry. Crypto also has low barrier of entry, but you need to now learn the risk that comes with all of these investment vehicles because they are more volatile than each other, than another. Look like crypto, that's the most volatile among all. Stock is also high risk. So you look at all of these things and then you now decide which one best suits you. And me, I'm personally involved more in stocks. Most of my portfolio are in stocks, and I have about 10% of it in crypto as well. So I do both stock and crypto, but very tiny amount in crypto because I understand my own investment profile. And when I understand my own investment profile, it means I know my risk. So I know the risk I can take. And knowing the risk that I can take saves me all the stress. So that is why I allocated more to stocks than crypto. For you, as a matter of fact, I personally don't tell any beginner to start from crypto. I think crypto is a jungle. Yes, it's something I think everyone should be involved with, but I think starting with stocks is best for someone who is just starting their investment journey. So you now start to learn about all of these things at this stage. There are so many books that have been written, but I believe in starting from the classic books like The Richest Man in Babylon, that sets a foundation for you to build wealth. It tells you about savings, tells you about investing, how to go about all of these things. Then you read books like The Rich Man, Poor Dad, that by Robert Kiyosaki. That book also distinguishes asset and liability to you. It has one quadrant that discusses about being an investor, being an employee, and all of these things. So you learn about all of these things at this stage. When you now learn about all of these things, you learn about how the stock market works or whichever investment you want to go for. Go on YouTube, listen to podcasts that discuss about this topic. embed yourself into this habit of just listening and reading about something about personal finance every single time. When you do this, it compounds, and you tend to see that at the end of the day, you have so much knowledge about how this thing works. Then you can now move to the final stage, which is the stage where you now start to build wealth, which is the stage where you start investing. So you now start investing with whatever is left over from those income that you have saved at the first stage. You start building. It doesn't come as fast as you think. You build slowly, and it takes time for it to really show. But is it worth it? I can say it over and over that it's worth starting investing. And that's the only way you can build wealth, right? Naval African once said, to build wealth, you need to own a business or own an equity. All of us cannot own a business. But in order to build wealth, if you can't own a business, own an equity. That means you investing in the stock market, right? So to do this, it doesn't matter how much you have. Start with whatever you have. Start building slowly. When I started my investment journey, I started with 50 pounds there and there, 100 pounds there, and I just continue like that. What I realized is that the more I understand how the stock market works, the more confident I become. And the more confident I become, the more I increase what I put inside the account. In the first year, I realized that I have 6,000 pounds in the account. And at the beginning stage, the investment will not be really moving as you want. It will be going slowly. But along the way, it starts to really make sense. So this is where you now start investing. You start investing, you try as much as possible to increase your income along the way so that you can invest more. The more you understand it, the better it becomes for you. So guys, this is how you build a solid financial foundation, and everything will just be an autopilot from there, because you now have an emergency fund, you have all of those things. Now it's time to double up on investment. You now start to build that investing. And the thing with investing is that when it starts to kick off, you'll be surprised that a goal that you set to achieve in 5 years is going to be achieved in 3 years. Why? Because of investment return and compound interest. That is the benefit of investing, guys. And it's so important. But you can't jump one stage and move on to the last stage. If you do that, you are likely not going to be successful. So these things require building a system around it if you really want to make it work. So guys, this is how you build wealth. I've tried this and it's working for me. And where I am today is not where I would have been if I didn't take some of these steps. So these steps have worked for me. So try and use it for yourself as well. And it should work in any country. Whether you are in Nigeria, you are in UK, you are in US, Canada, or anywhere, this step should work for you. So if you find this video interesting, guys, like, share, and subscribe to the channel. Also, in the comment section, ask any question that you have. I'll be glad to answer your question. And if there's anything in particular that you want me to discuss, do mention in the comment section. I'll be happy to discuss the topic. Thanks.